Barclays announced its results and profits were down, especially on the back of provisions for bad loans. Now, within those results, Hudhaifa Aden, who was reporting on that, managed to catch a few minutes with the company's CEO, Jeremy Awori, and he asked him about that and many, many more issues.
How did the capping of interest rates affect your performance?
I think when you look at the rate cap and what impact the rate cap had on our numbers, it's in the region of impacting our revenues by about 15% as at now. But there's a whole series of measures that we're trying to take to try and minimize that impact as we move forward. So that obviously flowed through in the last quarter to affect our overall financial performance. And I think from a revenue side, if that cap had not been there, we would have seen double-digit growth in revenue, which I think was quite encouraging for us. What we announced today was an 8% increase in our revenue pool. But more importantly, our lending had grown by 16%, which is outpacing the market, which really shows our contribution to growth in lending. So when we look at SME, we lent by almost 20%. Corporate banking was up 34%. So those are encouraging areas of our performance.
The performance is said to be affected by an increase in impairment costs. Tell us a bit about it.
We all know 2016 was a challenging year, and that's very visible when you look at, say, the performance of companies listed on the NSE. You've seen how the index has been, has declined during the year, and I think that's just an indicator of how companies have been finding it quite challenging to operate. So what we have found is that, along with certain instances of heightened job losses, has led to a rise in impairment, people who are struggling to be able to repay their loans. The other thing that has driven up our impairment numbers is the fact that now we've been growing in the double digits, our lending book, over the last 3 years. So just that alone would drive up the absolute impairment levels, even if our loan loss rate stayed the same. So there's that element as well. And then the last element is we always take a very prudent and conservative view around the assets that we classify as non-performing. So I think those three factors have led us to see an increase in impairment and non-performing loans.
How is the lending to the SME sector and maybe the individuals after the capping of interest rates?
Yeah, I mean, obviously when the capping of interest rates came in, that made banks sort of reflect upon the risk segments that they actually were willing to lend into. I think for ourselves, we have a range of segments that we lend into. And what we experienced was, in certain segments, we saw an increase in lending. And that was visible in our results. We saw quite a big growth in the last quarter. But that was largely clients who were topping up. So people who already had credit now qualified for more credit and opted to take that credit. My own personal opinion is that is not necessarily going to be hugely sustainable in the long run, because what you also want to do is you want to see new people getting credit.
What is the bank's growth outlook in this new environment of capping of interest rates?
We're excited about the future. We are ready for a fairly volatile, and unpredictable environment. But we see fundamental opportunities in Kenya and within the region, and we're investing for those opportunities. Our strategy remains in place. I think we've talked about diversifying revenue, going into new areas like agriculture, mortgages, bank assurance. Those are just a few to mention opportunities that we see. So those still remain. I think we're at the point now where we need to reflect upon whether the new law, Banking Act, has actually served the purpose that they thought it would, and we'll see how that evolves. But it doesn't change our strategy around being a very digital, automated bank, providing customer solutions that they value so that they can focus on growing their respective business or achieving their life goals. So we're optimistic and just executing our strategy.